also welcome on board Ajay Srivastava. Ajay, hi, morning. Played unexpected lines. It's singing an upside of almost 250 odd points. You've got the India VIX, which is already testing its 50 DMA. Downtick of 25% is what we've seen. Everything from the Adani names to Reliance to Bajaj Finance, Yes Bank, SBI, Maruti, they're all flying high. Are you a buyer today?
Of course not. Of course not. And, well, actually, no. To be honest, we did buy a little bit in the morning, but we are not a big buyer in this kind of a market. And we have, with God's grace, we were not short, so at least we were not caught on the wrong side. But you know, the key point to us is very simple. I think the big event is over, or at least seems to be over. And the only now important thing to see is what will change in the economic and financial policies of the government, because the same government was in power in the past with the majority. The same is going to be in the majority. So for us as investors, we need to figure it out what's going to change and how fast it's going to change in the backdrop that India is seeing one of the worst drought. So the government focus has to be there. A lot of money has to go there. So when will the chance of the corporate India come? When will the GST reductions come? When will the RBI open the taps? I think all these are kind of questions on the table before we take a recall on the market or the direction or the trajectory. For the time being, there is a stable government in the country, which is good for any kind of an economy by and large, not only India. So from a stock market perspective, I think a stable government is a good government. Therefore, we move forward. The question is, what changes now?
I mean, my simple question is that if you're sounding confident and if you think that markets will be not higher but much higher from here, so then why not buy for that 15%? So what you miss today's 5%?
Okay, I think the backdrop is very simple. The backdrop is most of us are going into this thing in a pretty long position at this point of time, Nukun. So really speaking, you know, you're talking of deploying the balance 20-25% of cash in the portfolio. And I would, and you know, you are out, you're not in sectors such as autos. We are not invested at all in autos, for instance. So we have got several sectors that we see that we are not invested in. And when the time is ripe, we should come in. Surely you're right, 5%, 10% is all there is to play for in terms of downside. But that's not the way we look at it. We look at it as, you know, we need a firm change in the trajectory of the market. That's one. The number two is we need to, you know, as we keep saying, it's all about churn of the portfolio. It's not the same guys will not keep singing all over the time, except HDFC Bank does for years and years put together. I think the real story is going to come when the rest of the country and rest of the index and rest of the companies are going to come into the fray, because that shows the depth of the market, that shows the true depth of the system. And that is why you keep 20-25% cash on the sideline to deploy them. You know, today is not the ideal day to deploy it, because as I said, we need to see a firm change in direction, and it could be the fact that given the economic situation and the rural distress and so on, and let's not forget assembly elections down the corner in West Bengal, Maharashtra, etc., lots of energies might go there rather than coming this way. So I think the verdict is not clear for the stock market. For the time being, let's rejoice that there is a government which is stable, there is a continuity of policy. Now, whether it translates into stock market gains, that's something which we are debating ourselves and so on and so forth, which is why we're holding our hand and saying, let's go deep dive into this one and say 15-20% upside. I think you have two very painful quarters ahead, and let's be mindful of that. And the whole market today, if you really ask me, Nikon, that's the worry part, rest on liquidity. It's not resting on fundamental. It's all about FIs came in, took the market to 11,800. FIs walked out, market went to 11,100. So when you're playing a game on for and against international liquidity and not fundamental, you're really playing a timing game, and that's not our forte. Our forte is more fundamental than timing on cash flows.
And that's the point that you were making, Alistair, right? That once Modi comes back into power, assuming that, you know, on 24th we see a replication of what the exit polls are also indicating, he'll have lots on his plate, and the economy is what he'll have to focus on first.
Well, first thing you'll have to focus on is appointing a new cabinet.
Yeah, besides that, of course.
But I think that's very pertinent to the question which you just asked, actually, Aisha, because one of the things which I think could boost investor sentiment is a change of the helm at the finance ministry.
Oh, really?
Yeah. I mean, I'm not saying that that's going to happen, but what I am saying is that I don't honestly think, in the eyes of many investors outside India at least, the finance ministry under Arun Jaitley has exactly covered itself in glory over the last 5 years.
Why do you say that?
I just don't feel that he has. I think he's actually carried the can in the eyes of foreign investors for the perception that the outgoing BJP government has underperformed on reform.
You know, there's one point which I would just like to make here is that when UPA 2 got elected, this market was circuit up. And everyone thought that continuity, a full mandate, and then this market and the economy would get re-rated. So market rallied in May 2009, and then after for 4 years Nifty and the Sensex did not go anywhere. And by the time UPA 2 wrapped out, the word which we had started officially using was policy paralysis. You know, that's what happens when you look at what markets view and what the real economy is and what the political economy forces you to do. Frankly, if you talk about the manifesto of the NDA and the BJP, the manifesto is still very focused around rural. It is not completely, you know, right of center. It is still, you know, left of center. It is not like a right-wing manifesto, so to speak. So, Ajay, that's my broader part. Today, we may be feeling slightly more confident about extension and continuity, and markets would vote for that, and I think that is visible in today's tape, and this rally may continue for another 5-7%. But the broader message purely based on manifesto is that government will have to focus on things like rural stress, spending and social security spending, and farm distress. These are topics which may not make an ordinary capitalist or a market watcher or an economy commentator very happy.
Yeah, you know, having said that, I think that is required. You know, we have to take a sacrifice at the end of the day, and that is what I said, our views are tempered, because the government's priorities are going to be very different, quite different from the one that we think it's the right way to go, is to build up the mid cap, build the small cap, and let the economic returns flow. I think they will go for a direct intervention. It's part of the manifesto. The PM Yojana is already there, PM Arogya Yojana is already there. The Mudra loans, we are staring at a 1 lakh crore write-off already on the books of the bank. So I think that's why I said, what is going to change? Is it going to change that, listen, we go back to supporting our small cap, mid cap, industrial sectors, segments, and then we get the economy to revive and therefore create employment? Or is the direct intervention, which is already announced, going to be the preponderant way this is going to move forward? And that is where the caution comes in, that if that is what the priority is going to be, then the attention towards what is required on this side will be much less. And you know, we got a whole agenda, not only government, RBI has to come up with a new NPA circular. Now that's a big one. If that, what happens to this whole NPA of power? You know, we have all been sanguine about PSU banks, saying, oh yeah, they're out of the woods. But if the double whammy hits them on the power producers and these Uday loans which are staring in the face of state government, which cannot be serviced any longer, then you got a different ball game out there. So RBI circular NPAs is going to play a key issue. What happens to NBFCs? You know, the whole working capital cycle today of the country is at a standstill, because loan against properties was the way people used to fund the businesses. Now when that stops and people want the money back, forget even getting new money, the side engines are started to clog now at this point of time. Now those need to be opened up. Now, that's why I said a dramatic change in the way you look at the system is a key order for this economy to come back into a chugging mode. Otherwise, direct intervention can give only so much benefit. You know, I don't think direct intervention will benefit a Dabur, Dal Manjan or whatever it is, because that's not what people are going to use for. That drought area is going to be used for water, food grains, etc., etc. So I think the verdict is clear. Let's see what the new policies are. Let's see RBI's new NPA policy. And you know, this whole thing about interest rate reduction, that's not happening in a hurry, because the transmission of interest rate has not happened in the last 50 basis points, not even 5 basis points, really speaking. There is no reason to believe that between the state government, Uday loans, Government of India borrowing put together, even after 2 to 3 lakh crore transfer from reserves, you will see a heavily crowded borrowing calendar of the Government of India. With this kind of mandate, they have no choice but to spend big on social security. I think there is no choice. It's a compulsion. And therefore, I don't see interest rate falling. The only thing I see is RBI opening serious taps, loosening up controls on NBFCs, letting people do. You know, sometimes being virtuous beyond a point becomes counterproductive. So we need to let go certain things and let the economy move on. And I think that's where we are looking at direction to see the market is. And I think most people in the investors in the market are sensing it. You know, we are placing calls in the market. Typically, you get a lot of calls in the morning. You don't get many calls today, because people are waiting and seeing what's going to happen.
You know, I'll tell you what's